What's up today? I hope you having a wonderful day. We had some really good trades today, and I'm going to be walking you through. We had a little bit of volatility into the close, which was caused from the FOMC, and I'm going to be breaking down all the opportunities for you guys step by step. All right. So if you're ready, let's step into the war zone. So first of all, let me go ahead and shout out some of you guys here right now. I appreciate you. Roop, what's going on? Today was awesome. Good job. Good to see you're doing well. Alex, what's going on? D in the building. Luca, Daydreamer, what's going on? Always Friday, what's going on? Bad Indie, Trading Wars Army. Sharky, Trading Wars Army. Handsome Dan, Trading Wars Army. Mike, Lewis, Trading Wars Army. Trading Wars Army in the building strong. JF, what's going on? Adriana, Trading Wars Army. Angie, what's going on? Good to see you guys. One Cap, JL Fish, JI Fish, what's going on? Ramon in the building. Cade, Mads, Johnny, Enrique, what's going on? Remelkun, what's going on, brother? All right. So without further ado, let us begin. What I do, what's going on? Trading Wars Army. All right. So the first thing that we did today, guys, is we had a big gap down. Okay. And we're really happy about this gap down because we did enter short yesterday from my call out on Twitter. So we started off this morning with a gap down. Let me just show you the call out on Twitter just to show you guys, which was right here. So this was the one we went short at 452.73. That was yesterday. So let's draw that line in today so we can get a reference. And what you normally going to see is when we have selling into the close, especially a lot of selling like what happened yesterday, we can gap down, right? That was a lot of selling into the close. So the first 3 minutes came in and you could see that we did gap down. And normally what you want to do is on these gap downs, you want to go ahead and cover something, right? You don't want to get greedy. Whenever you have a gap and it's in your direction on a swing trade, it's always a good idea to cover some profits off the table to be safe. So the first thing that I started off today in the live room, guys, is I hit a 3-minute opening range breakout. And the reason, again, is because of that gap. We had a lot of volatility, and I wanted to capitalize on that. So let's go ahead here to the live rich commentary, and let's go through the morning. So it was only one trade that I did in the live room today, and it was one nice winner, and that was it. And I'm going to show you one of the Fibonacci plays that we also took in the small account. So right here, you could see me starting off. If you held some of our short yesterday, you probably don't need to trade for the rest of the week and should just manage existing trade. And that's the truth. Like if you ever have a big winning trade, you want to manage that trade, especially if it's a swing, and you don't want to overtrade after that because sometimes it makes you feel too confident, right? And you don't want to overtrade. So you can see right here. All right, let's start off with the orb, and then we went short at 933. Okay, so let me go ahead and just walk you through that. So the first candle was actually very bullish in the beginning. If we go down to the 1 minute, you'll be able to see that we had a big push up. So right off the open, it looked like the bulls were stepping in. But what happened is by the end of the close of this candle, we reversed. And that's why I always like to wait. That's why I always like to wait until the actual close of the bar. Because that way I could see the candle more clearly and understand what was really going on. So right off of that, guys, what we had was we just bracket this candle. So if it breaks the high, we want to go long. And if it breaks the low, we want to go short. So hit me with a 1 if you're following me so far. Hit me with a 1 if you're following me so far. So opening range breakout means you wait for the first bar. Okay. Once that first bar is closed, you have orders on both sides. You never have a bias on the opening range breakout because you don't know if it's going to be a big reversal to the upside or to the downside. And we are just trying to play what's in front of us and what the market gives us. Okay. So we could see the next candle came in, filled us short. So we got filled short. And then what I did from there is I just laid out the targets. So we first target was 44607, then 44579, then that moved the trailing stop to 46651, which was break even, and then 455.79 was the last main target. So I just basically on these new lows here, every time we got a new low, just keep taking profit. Okay. And then once we got down here, I put the stop loss to break even. I had enough clearance. So you don't want to go ahead and put the stop loss to break even too quickly. You want to have a good clearance. So I always look for the candle. So you could see that we had this long wick candle to the upside here. So if our position, we start off like this. Let me show you. So if we start off with an entry there, then we start hitting targets on the way down. Once we have a good clearance, right? So you see how where this candle is, and you see how the wick is above our break even. Then below our break even, sorry. Then I went ahead and put the stop loss to break even. So this one was a great little orb, and then we continued down later in the day. We did a little bit of a soft pullback, right? This is a soft pullback. It wasn't really deep at all. So I could show you here. We had that push, pull back, and then push down. So what is the rule that I like to do with these plays? How many legs do we normally see before a reversal? What do you guys think? How many legs? So this is a strategy that I taught you guys before. We haven't really talked about it a lot, but how many legs do we see before a reversal in general? What do you guys think? 2, right? So there we go. So once we take the fib from low to high here, okay, you could see we had a shallow reversal. But once we get this new low, this is the second leg. So here's your first leg, pull back, second leg. So really on the second leg, you want to be getting out of that position very, very quickly. Okay. So you really want to, once you get that new low, you want to get out of that position. You don't want to hold on. And then you could see how nicely it lines up with that 272 extension. We went a little bit deeper in here, but right on the 272 is where we get that reversal. All right. So this puts play made about 60% from when we got in short. This went for about 60%. It was a really, really good short on the 0 days to expire. Okay, so there's Wednesday expiry today because SPY has options on Monday, Wednesdays, and Fridays, which is the main advantage of SPY. So with the 0 days to expire, those puts, just one strike out of the money, those went for 60% in that time. And that was literally that was less than an hour. So you really can't ask for better than that. Hit me with a 5 if you follow me so far. So that was basically that was the trade that I called out today, and that was pretty much it. In terms of my callouts. We are up 3 days in a row. So knowing that FOMC was later today, I encourage everybody not to overtrade, not to do anything dumb, because we can get really volatile here. And it's a double-edged sword. You can make a lot, but you can also lose a lot. So that being the case, I rather stick to the side and move from there. Why did you use 3-minute candle and what you normally use is 5? I guess I guess you haven't been following along recently, but we've been using the 3-minute a lot more. And in the last few months, we've been doing the 3-minute mostly. So if you're in the room, just make sure you're following the live commentary so you could see which ones that I use. So I set it right here at 9:30. I'm watching the 3-minute orb here. Who's ready? And then we went short at 9:33. So make sure you follow my commentary in the morning. You'll see which ones I use. But lately, I've been using mostly the 3-minute. All right. So there we go. And notice here, when we come to that 272 extension, there is somewhat of a reversal. And we get like this little double bottom here, which is the next part of the trade that I wanted to talk to you about. Okay. Can I explain orb? I have a whole video on the orb. So please take a look at that. It stands for the opening range breakout. And what you're trying to do is wait for the first candle to close and you play off of the breakout of that range. So what I'm going to do now is I'm going to take you to the small account challenge. And I'm going to show you that one because there was a nice fib play here. This fib is going to be a little bit advanced. So you're going to need to get the pen and the pad out for this one, because this is something that is a little bit advanced, but I will want you guys to learn it so you can use it. Okay. So we're going to the other account here. This is my brother's account on the small account challenge. So he made $598 today and 60 cents using the Fibonacci on futures. Okay. So I'm going to walk you through this right now. And I want you to write this down. So hit me with a 10 when you have a pen in the pad out. And we're going to go into this one in detail. And he made a big mistake today. It's not a big mistake, but it was a mistake. And I'm going to walk you through his mistake. Luckily, he still made money, but some days those mistakes will cost you. So I want to share with you everything that new traders go through. And that's the main reason that my brother's doing the challenge too, because he's a new trader. He can relate to you guys. And I'm going to talk to you through everything with him. Because I had a coaching call with him basically today just to walk him through what I thought he could have done better with this trade. Okay, so here we go. So we normally have the morning leg, closing leg, afternoon leg. Those are the normal ones we have on the Fibonacci. So these are the legs that I write about in my book, and these come from my years of back testing. And I want to say something. I'm going to say something right now because it's been bothering me, and I'm going to just say it right now. So there's a lot of people on Twitter. There's a lot of people in general that have been copying things that I do. And I want to say something, guys, that all the strategies that I've created has come from my back testing and spending my own money. So I've spent hundreds of thousands of dollars testing my strategies and putting them to work and understanding how they work before I share with anybody else. And I spent thousands and thousands of hours of back testing and losing money as well to refine my process. So I've noticed that a lot of people have just basically been copying exactly what I'm saying and what I'm doing and trying to sell it to other people on Discord. And I don't mind if people use what I do and they want to share it and they want to learn. But when people try to sell my products to other people and rename them, or they try to sell it and say they're supporting me, that really gets on my nerves. And you guys know who you are. And I want to ask you kindly to just stop that, okay? Because the way that I got into the game was I proved myself. I went on Twitter and I did live callouts. I created my own strategies. There's millions of strategies that you guys can use. And I'm just asking you guys to be creative and do your own thing, okay? Because that's how I got where I am, because I always did my own thing. I always brought something new to the table. I'll also always be creative. So I encourage you guys to be creative, guys, and just find ways to just, copying someone is not the answer. Okay. And that's all I'm going to say about that. Okay. So here we go. So we had the first leg down, and we know that this one had this 272 reversal. Okay. And we saw that the retracement was pretty shallow, right? It wasn't a deep retracement. It was just 28%. So a few things happen here. The first thing is this: not a lot of people got to jump on the bandwagon for this short. Okay. And I'm going to show you how this comes back into play later. And we also had the measured move here. We also had people that were swing trading from yesterday, like myself, that we already made a lot of money. Okay. So let me ask you guys a question. Do you guys think, what did I do? Do you guys think that some people are going to be taking profits over here? What do you guys think? Just think about it like this. You always have to think about what's going on in the market. So there's people that have been shorting yesterday, right? And we come down, we gap down, we start breaking down. We have two legs down. We have a measured move. We have Fibonacci. We have a lot of things happening. So hit me with a 1. Like, just put yourself in that short situation. Hit me with a 1 if you would feel like, hey, let me take some profits. Okay. Hit me with a 1 if you feel like, hey, let me take some profits. Let's say you made 300 or 400%. Maybe you made 1,000%. Maybe you bought Wednesday expiry yesterday. You went out of the money and you made 1,000%. Right? So now you have to think about that, and you have to think, okay, what's going to happen on the other side now? So there's also going to be bulls that are like, I'm going to buy the dip. There's always going to be that. Okay. And today is an even more volatile day because of FOMC. And because of that, we know that there's going to be some people that are just going to try to buy the dip in case we get a positive news, whatever, and then they can make money that way. So once we have this leg complete, now what you want to do is that very first push up. So that very first push up, so this one right here is going to be your opposing leg. Opposing means it's doing opposite of the trend. So what you want to do there is you want to take your Fibonacci to your low, to your high like this. Okay. And now you see this 618 is going to be your purchase point, and this 786, so on. So this is the opposing leg. And then you can look in the small account, we bought in on the 618 and the 786. So both. So it came in here and it came in here and it filled. Okay. So hit me with the 3 if you're following me so far. So the opposing leg is doing the opposite of the trend. And the main benefit of Fibonacci is you're sitting and you're waiting like a sniper. You're not chasing anything. Okay, so once the leg has been moved up, once you have that push up, you wait for the pullback. Okay, that's what makes Fibonacci so powerful. You're waiting for the pullback. You're never the one that's chasing. And that's why it's such a powerful strategy. Okay, so I'm going to show you now. We came here and basically the target is this line right here, which is the 0.169. So I'm going to show you this right now. I'm going to show you the mistakes that were made. So the first thing is my brother, he got in the 618 and the 786, which was good. Okay, that's a great trade. Boom, Roman Empire with the $1.99 super sticker. Thank you very much, my brother. Appreciate Roman, one of our mods. Very good guy, very hardworking guy. Appreciate him. So once we got into the 618 and the 786, here's the yellow line. Here's the target. So let me explain to you what happened. When we started to run up like this, I want you to ignore everything like this. Okay, don't look at this. Pretend you never saw this. Okay, actually, can I hit the replay? Okay, so just look at that candle. So remember, we bought here in the small account and we bought here on these two lines. Okay, so when this green candle came in, I'm gonna ask you a question now. How would you feel? Would you close your position? Hit me with a 1. If that green candle came in, you would close your position. Hit me with a 2 if you wouldn't. And just if you look at this candle, it looks extremely bullish, right? Like it looks like it can just keep going up forever, right? And I'm going to show you something that's very key here. Okay, this candle looks like it's going to go up forever. So what Derry made a mistake today is he didn't take his profit right away. Okay, because he was playing, he just like the emotions. Okay, he's only been trading for a few months. The emotions gets to you, and he didn't take the profits because it looks like, if I look at this right now, it looks like it's going to go up. Okay, but here's the trick. What about the afternoon leg? What about the afternoon leg? What about that? Wait 1 second. Let's draw the afternoon leg, which is from the high to the low. Hold on a second. Wait. Do you guys see anything here? This is on the 618 of the afternoon leg. No way. No way. This is where the power of Fibonacci comes into play. Because if you don't understand where the fibs are, you see that and you're like, oh, this candle is very bullish. But look what happens now. Now the bear algo steps in. Boom, boom, boom. The bear algo steps in. Bam, 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 bam. Watch that. And all of a sudden, the position that was green is now red. You guys following me so far? Hit me with a 5 if you follow me. This is why it's so important to use the Fibonacci. Because we took the long here. And our targets lined up with the 618. But if you let the emotions get to you, this is what can happen. And luckily, our stop loss was the low of the day, which is the red line. And watch what happens next. Bam, target achieved. Okay? So that was a lesson today. And I know many of you have suffered through that. I myself have suffered through that many times. And that's why I prefer to always do automated trades when I can. And when I trade live, I have a bracket order. The target and the stop loss is always fixed. So you could even see in his post here, he wrote that I took the opposing leg today and it reversed into my target at around 1150. I didn't take my target at the time. However, today is the first day I broke this rule after a little more than a month of trading the strategy. Valuable lesson today. Always stick to your targets. You can see after it hit my target, it reversed back into my entries at 12. However, it did not want to stop me out and the bull algo revived into my target for the second time. And then you'll see again why it's so important, because look, right after this, we have the big FOMC. And in general, what the FOMC loves to do is stop hunt. So you could see the FOMC went and stopped out all the bulls first before making a move. Okay, see that? So take your profits, take your money, have a plan. All right. So go ahead and hit me with a 9 if that made sense. Hit me with a 9 if that made sense. There's a specific way to trade FOMC. And we talk about it. We talk about it in the room. There's a specific way to trade it, but it is always a gamble. Always a gamble, guys. So you always have to trade small. So there we go. So just to recap, we had the 3-minute opening range breakout, which went for about 60% at the open. This move here, we had 2 legs. That was really good. Then we went ahead and we took the reversal Fibonacci leg, which was right here. This took us to the target, which we almost messed up because we almost got stopped out. And then it came back up again and we got saved. We had a 618 right here, and then the FOMC came in, so you could see the chart moving north. And the way you trade FOMC is very different than the way you trade fibs. So hit me with an 11 if you want a lesson on how to trade the FOMC. Hit me with an 11 if you want to do that. I'm going to show you some tricks on that too. So hit me with 8, and I want to thank you guys for joining me tonight. I very much appreciate your time. Thank you so much. Okay. So one of the ways we like to trade the FOMC is using the trading wars patterns. So the yellow and the blue. So the yellow is the holy grail and the nirvana is the blue. Okay. And I got to take that call after, guys. And the yellow is the holy grail. The blue is the nirvana. So you can add my indicators right here, trading wars, golden indicators. You can add that and you'll have the bars. But if you want the nirvana, trading wars nirvana, the blue one, that's a special one for my members only. You get that in the Discord. Okay. So I made that for my members. But what we like to do is in FOMC, we like to wait for advanced patterns. So inside, outside, and outside, inside. And with that, guys, what it does is it allows us to just be laser focused because we look for specific patterns. And what I like about using the holy grail and the nirvana is you already know where your stop loss is, so you don't get greedy. So for example, here's a holy grail. With the holy grail, we take the break below or above the bar. Okay, bro. So what happens here is we break the low, so we go short and we put our stop on the other side. And then here's a nirvana. So what happens with the nirvana? Again, it breaks to the upside. We keep our stop below the low and we're good. Okay, so that's why I like using the advanced patterns, because they're very simple. The chart will highlight in the right color for you, so you don't have to go crazy. And then you just take the entry and then put the stop loss on the other side. That's the easiest way to do it. And it allows you to like just focus on the right trades that come to you. Okay, does that make sense? Hit me with a 3 if that makes sense. So for the FOMC, less is more. You want to wait for the advanced patterns. And then when you get the advanced patterns, you know you have a good chance, right? It's not going to be 100% win rate. But in this case, it was, because we had a holy grail nirvana. They both were winners. A lot of the times, I do see the advanced patterns work really well in FOMC, but not 100% of the time. But a lot of the time, they work really well. And you can just go back and look at that in the past and see what the results are. So that's how I would trade it. All right, let's back off and let's go to the daily chart for SPY. So here's the daily chart now. And this is very important because I brought this up yesterday. And the first thing is we had an outside bar. So unfortunately, with the outside bar, we weren't able to get filled for a swing trade today because it gapped down below our entry. So we weren't able to get filled. And that's okay because I'm not going to chase. Instead, I just took the 3-minute opening range breakout. Okay. I took the 3-minute opening range breakout instead. So that's fine. I couldn't get filled on the daily chart. But what we have here is we have basically this doji. And this doji is very important because remember, I drew this leg up for us the other day. Here's the low to the high. And this is the first stop for the bulls. Okay. So the bulls are all like, if the trend is very strong, the bull is going to start on the 382. And we could see that the bull is already stepping in on the 382. I don't like to be a buyer at the 382. I won't have an order waiting there. I will have an order waiting on the 618. I prefer that. But what you can do when you start to see these type of patterns on the higher fibs, like the 382, we can just play this bar. So now this bar is a critical bar because you can swing trade off of this bar. So if it breaks to the upside, you can go long. If it breaks to the downside, you could go short. And why would you want to do that? Well, because it's sitting on a fib. So it's a major pivot. Okay. Yeah. And you could also do the 50, but above the 50, I don't like just having, orders sitting there because I don't feel like I'm getting a good deal. But here we go. You could see here that we had this 382 now. So if the trend is very strong, like you see, we have this trend for the past, few weeks. If it's very strong, we will start turning the corner immediately and make a new high within 2 weeks. But what's likely to happen is a little bit of chop and consolidation, or a little bit of drifting lower to get these bigger fibs, because a lot of algorithms like the bigger fibs, and a lot of traders want to get a good deal. But if we don't, then what we can do is just take the breakout of this bar into tomorrow and then just take that as a swing. All right. So hit me with a 4 for the 4 horsemen, and hit me with a 4 if that made sense. Right. So the last swing trade that we took was this one down here. And I shared this with the room, and I also shared this on Twitter for free. This was the last one we took here. And the reason I liked this one so much was this was a 786. So you could see that we had a very good risk to reward, because we came in here on 786, put the stop loss there. We're only risking a little bit, but look at the reward. Look how much we got in reward, right? But I don't feel the same way over here, because if we draw this leg, we're only getting to the 382. So if I wanted to risk down here, I'm not going to get a good risk to reward. See what I'm saying? But that being the case, if we turn the corner tomorrow, we could just risk this bar and just trade this bar. So a lot of opportunities happening here. And let's go to the weekly and just take a look at this. So if we look at the weekly, we have to remember what got us here. And the first thing that got us here is we had this outside bar at the highs, right? And the outside bar at the highs took us down. And this was one of the trades we said this could be the high of the year, because what happens with an outside bar is, you could see we barely made a new high. We made a new high by a few pennies, and all of the chasers, all of the breakout buyers got punished, and we turned around immediately, right? So if I draw the fib from this pivot down here, you could see that we had a 618, and that 618 traded to the 0.169, which is one of my custom Fibonacci's. And that's what took us back up. Okay. And that's where we're able to get long. If we do the same thing now, we could draw the whole picture here like this. And you could see we're in that zone, the same zone that we always have trouble, which is basically the 618 area. Okay. So I don't expect anything to be like go down. I don't expect the bears or the bulls to go down without a fight. So we can definitely see a lot of volatility and a lot of momentum. We've already had some bears stepping in here, and right now they're still happy. So this is not a bad trade for the bears yet until we start turning around the corner. Okay. Do you ever trade Tesla using fibs? Yes, I do. And I did it on last Friday, and we did some free winners on YouTube. Even if red candle, you still take the break. I take the break. Yeah, I take the break. All right. So there we go, guys. I hope you enjoyed the stream today. Just one day trade on the Discord, and then one trade in the small account. And sometimes that's all it takes, And I know a lot of you guys like trading a lot. Why the 3 minute instead of the 5? I explained that earlier, so you can just take a look back. But basically, it's just like test it based on the back testing and the recent experience and stuff. I might go back to the 5 if I see the statistics change a little bit. But yeah, so there we go, guys. Less is more, really and truly. I'll give you an example of me in the past. When I was a new trader, I would take this orb and make money, and then I would try to trade FOMC, and I would probably lose all my money within the last hour. It'll actually be something like this, because I do remember when I was trading FOMC as a new trader, I would make $500 here and then lose $1,000 on the FOMC because of greed. And some of the things that I would have done in the past is I would have bought this breakout right here. So once the FOMC broke the high, because that's what I was looking at when I was learning trading. I was just like you guys until I started putting in the time and testing and putting my money and losing my money. I was just following everybody else. And they always tell you, buy the breakout, cup and handle. Here's your cup and your handle and your spoon and your fork. Like they're all here. Look, here's your cup. Here's your handle. Okay, here's the breakout, blah, 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 right? So I would have bought that breakout. I would have lost 500, and then I would have raged, and I would have bought this one down here, and I would have shorted, and I would have lost that too, and I would have lost $1,000, and then I would have ended the day negative. Hit me with a 7 if that sounds like something that's familiar to you. And the point is that you got to have a limit to how much you trade, and you have to know when to go all in and when to fold. Yeah. And you have to know where your odds are. and position sizing. Because if the volatility of the market doubles, you can't be trading with the same size. And I'm just telling you because I've done that before. And you got to break those habits in order to become profitable. You really do. All right. So there we go. Thank you so much for your time. Don't forget to leave a comment. If you leave a comment, you have a chance to win the giveaway. We'll do the giveaway on Sunday. I have Sarah joining me this Sunday. Sarah Strat Sniper joining me this Sunday, and we're going to be looking at her 50% rule, which I think is really cool because it incorporates the Fibonacci into her strat. And I like that a lot of traders are using fibs these days. Just shows you the power of them. So I would love to see what her thoughts are on Sunday, and I think you're going to enjoy the stream. So please go ahead and leave a comment, and then we'll do a giveaway on that Sunday. Thank you again for your time. Last thing is check me out at tradingwars.com. If you're interested in what I do, if you learn anything, if you gain any value, check me out here. Do not listen. I'm not on anything else. I'm not on Telegram, Instagram, Cookiegram, Coingram. I'm not on any of those. I'm only at tradingwars.com. Okay, so check me out there. All right. And I made this announcement earlier. I'll be raising the price of the Fibonacci book soon so that it'll keep up with the other books. This one is $88.60. And all the other books are $99. So I'm going to be raising the price of the Fib book. It needs some more love. It doesn't get enough love. So make sure you sign up by the end of the month, and you can lock in that price if you're interested, and you get 1 month for free. So you can trade with us live tomorrow. We've had 3 days green, not jinxing anything, but hopefully we can finish the rest of the week strong. Or you can sign up here directly right on the main page. Otherwise than that, I hope you enjoyed the stream, and I will catch you again tomorrow. Thank you very much, and take care.